Hey guys, welcome back to another episode of Crypto Truth. That's the name I'm giving myself because all I do is speak the truth and tell you guys facts. This blue line that's going in between these candlesticks is the 200-day moving average. This peak right here, that's 20K. That was 2017. It hit 20K. This is the all-time chart. Back here is 2012. Okay? That was like less than $5 back then for a Bitcoin. Okay, so what I want to point out on this chart in particular is as long as Bitcoin stays above this 200-day moving average, it's a buy and hold. When it dips below it, and you see that on the charts, it means we have ended the bull cycle and entered a bear cycle. And you can see it going down, going down. Each candlestick that you're seeing is a week. So these candlesticks represent a lot of time. Okay? And when this thing breaks above the 200-day moving average, it's a buy. You can see it ran all the way up to 20K and then dipped below it. So if you would have bought back here, right when it crossed above the 200-day moving average, and sold down here where it crossed below it, it would have been life-changing profits. I'm thinking 300 to 400%, if not more. Right now, we have crossed above. We are out of this bear market. You can tell. You can see we've crossed below it back in 2018. And now here we are in 2019, and we are up here. We're around right there. 11,000 right now. We are well above the 200-day moving average. So that's a buy and hold until we go below this 200-day moving average in the long term. Now let me exit out of this. And I'm going to go to a different chart for the short term. All I did was drew some lines, 2 lines, and I came up with a symmetrical triangle or a ascending triangle. Because if you see this line right here, the lows of these candlesticks are respecting that line. Okay? That means they're not, as time progresses this way, it should only get higher. And then you got this resistance line up top here. So what happens when these resistance, and this top line is a resistance line, and this line is a support line. What happens with Bitcoin especially, all charts really, but when you have resistance and support squeezed like a tube of ketchup, just squeezing it out the bottle, you're either going to get a break up or a break down in a symmetrical triangle. And I'll show you that right here. Symmetrical triangle. You're either going to get a break. Something happens at the point here. You're either going to get a break up or break down. There's no really way to tell it. But what I think what we have more of is an ascending triangle. And that's more bullish. It says that it could go either way, but I would say it's more like 70-30. So let's look at the chart one more time here. So yeah, as you can see, the line up top is more flat than it is diagonal like this. So what I think we have is an ascending triangle, and that's bullish. And then there's also one more pattern I want to share with you in the short term, this same chart. And what we have is an inverse head and shoulders. And the way I know that this is legit is the volume. The volume on the head, those red sticks down there, they're higher for the head than they are for the right shoulder. And the left shoulder is somewhere in between. You can't count this big dip as a left shoulder. The left shoulder is up in here. So you can see that the red volume bars are much weaker than the head. This is a valid inverse head and shoulders. Again, very bullish. I'll show you on the Discord here. An inverse head and shoulders. What you do is you get yourself a dip from a high, like we had around 14,000 recently, and then it fell all the way to 9,600 or so. Bounced up to about 12.5, created the neckline. And what we need to do now is break that strong support, that neckline, or resistance, I'm sorry. The neckline is resistance until we break it. It is resistance. We will not, it's going to take a lot of green, a lot of buying volume to break that neckline. But when we do, you usually get a target of whatever distance on the chart from the neckline to the bottom of the head. So on the chart, okay, if we were to take a drawing tool here, and let's just, right here at the bottom of the head, oops, I don't know what that is, hold on. Let me go back to my drawing tool. We'll start here at the head. Work your way up to the neckline here. Okay. I'm going to take this, and I'm going to put it on top of the neckline. If I can grab it here. Sorry folks, I'm very new to this chart system here. Let me exit this. Jeez, I'm all over the place. We are looking at a target of 14,456 right to the high side. I mean, it's gonna just burst. It's gonna burst and hit that it's all blurry. 14,456. It will, if it breaks this neckline, this green trend line here, it's going across this inverse head and shoulders. If it breaks this with some authority, it'll hit 14,456. That is my target for the short term. Now, I want to go back to this one more time. And if this is a symmetrical triangle, it could go either way. It really can. So, I mean, you always have to be prepared for the downside. You can't be too bullish. Not on everything. So, yeah, there's that. I want to be realistic. It could go either way. But I see two very bullish patterns in the short term on this chart. Okay? Hope you guys enjoyed this video. Remember, I'm not a financial advisor. And also, if you did enjoy the video, like and subscribe and share with your friends if you like. Thanks. Have a good night.